I think in general, Bitcoin is now a kind of a superior alternative in a lot of ways. And so I'm more active and interested in the Bitcoin space. I do some venture capital work there. I kind of work with some startups and I provide a lot of research for that space. So I generally prefer that, but I still use gold as a diversifier.
Lyn Alden is an esteemed investment strategist and macroeconomist known for her insightful analysis of economic trends, monetary policy, and investment opportunities. Alden recognizes Bitcoin as a unique asset class with distinct characteristics that set it apart from traditional investments. She has highlighted its decentralized nature, limited supply, and potential as a store of value. Bitcoin big move due in July after March $30,000 push. The cryptocurrency market, however, continues to remain volatile. But thankfully for Bitcoin enthusiasts, the token has shown considerable tenacity. But the bulls were not able to maintain the price above the $27,000 support level. Alden has acknowledged that gold has historically served as a store of value and a hedge against inflation. She recognizes its long-standing history and widespread acceptance as a precious metal. According to Alden, certain countries have a stronger catalyst for embracing crypto, but as its use becomes more widespread, other nations will recognize its value. The days of the US dollar as the world's reserve currency may be coming to an end. As Lyn points out, there's going to be this financial repression where paper assets generally struggle in purchasing power terms compared to real assets, and gold would be one of these types of real assets along with silver. Lyn Alden points out, among other factors, a structurally inflationary environment affecting investors' interest in bonds or gold assets. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates about crypto market.
The next 6-12 months are very uncertain because of liquidity issues we discussed before. But when I look out 2 to 3 years, I think it'll have another significant bull cycle. And that's also one of the investments that I think I intend to hold it for over a decade more. I think it's a play that goes on, and there's very few things that I think could change that thesis. But as long as I continue to hold that thesis, I think that's going to be one of the better performing assets out there. I think there's still a window in the next 3 to 5 years where gold could do well. I think we're in kind of very uncertain times right now. And so the way it's kind of shaping up at the moment is like gold is like central bank money and Bitcoin is like people money, money for the people. And there's still this dynamic where Bitcoin is not really big enough for central banks to at least large central banks to really care about. And so I think there's this window here where gold's interesting, but I do think that Bitcoin is going to be the better performer over most cycles, for at least for investors that can withstand that volatility and that are willing to do time to research it and understand exactly what they own. So it's been in this decade where it got very over exuberant, about a decade ago. So you go back to say roughly the year 2000. Gold has roughly kept up or outpaced the S&P 500, which is pretty impressive. But all those gains were during the 2000s decade. So gold went from under $300 an ounce to nearly 2,000 an ounce. It just crushed almost everything else. And then it's been in this kind of bear market, sideways market for over a decade, and has obviously given up a lot of that advantage. Ever since the global financial crisis, we've seen a shift from central banks where, for a multi-decade period, they were reducing their gold tonnage and investing in things like treasuries instead. And it was like this, this kind of downward move. But then with the global financial crisis, you had like a V-shaped recovery. And you started to have increasing gold tonnage among central banks. And so I think as we enter a more multipolar world, and I think that we kind of have a long-term sovereign debt crisis in much of the developed world, that I think is going to play out over a longer period of time. I think gold is kind of an interesting hedge in that sense.
In her tweet, Alden highlighted that giving Bitcoin to AI, which they can then spend to access things that they need to complete their task. AI and Bitcoin. This is what the future holds for Bitcoin. The AI craze is just beginning and adoption is about to go parabolic. This warrants a look at how Bitcoin might benefit the adoption of AI. If an AI agent were able to mine Bitcoin, it could then sell the Bitcoin for fiat currency or use it to purchase other goods and services. As AI technology advances, it is possible to create autonomous AI agents capable of making independent decisions and interacting with their environment. In such a scenario, it's conceivable that an AI agent could interact with online platforms or services, potentially acquiring or exchanging Bitcoin to fulfill specific goals. Alden mentioned in the tweet, it'll be interesting when an AI agent gets Bitcoin and the creators don't know where it got it from. For example, an AI agent determines it needs some money to do a task, spins up a wallet, earns or asks for some Bitcoin online, and then spends it to get what it needs. If an AI agent were able to trade Bitcoin successfully, it could accumulate a large amount of Bitcoin over time. Overall, the development of AI agents that can access Bitcoin is a complex issue with both potential risks and potential benefits.
Looking for long-term growth stories, whether it's Bitcoin, whether it's some of these software programs that could benefit from AI and become more accessible, that kind of thing. But then on the other side, I'm saying, okay, what is completely left for dead, underinvested in, trading at single-digit price to earnings ratios, but super profitable and going to be with us for a long time. And that's where I'd point towards those energy, commodities, infrastructure type assets. So basically, one pillar is cash equivalents. It could be money markets, T-bills, cash in the bank, that kind of thing. Another pillar is just long-term equities, generally profitable long-term compounding equities. Could be indices, could be individual stocks. And then the third pillar is commodity plays, hard assets, infrastructure, hard monies, gold, Bitcoin, things like that, that are more debasement hedges or inflation hedges, decent amount of energy exposure, for example. And each of those pillars defends or benefits from a certain type of environment. And so should we get these, the kind of the worst case scenario liquidity problems, that's where the cash equivalents would really come in handy for, reducing some downside volatility and allowing for a rebalancing opportunity into some of the other more attractive long-term assets. I also think there's an intersection between AI and Bitcoin in the sense that people have been talking for a while about micropayments or machine-to-machine payments, or human-to-machine payments or machine-to-human payments. And we're actually seeing really early signs of that. So, the existing money system has all sorts of frictions. It has global payment frictions, for people that send payments globally regularly. You run into more frictions than just, domestically. You can't really do microtransactions because there's like a minimum threshold for how big payments have to be. Like for example, like payment services will charge like a 30-cent minimum fee, which means sending anything under a couple dollars doesn't really make sense. You can't just pay 25 cents for an article to read online, for example. And with like say Bitcoin, Lightning Network, and other sort of scaling solutions, it opens up real-time micropayments. And because it's open source, it also means that AI can actually use it without anyone's permission, right? And AI doesn't have to go get a bank account. Instead, they can, there's already been cases where creators will give an AI agent a small Lightning balance that they can pay. If they have a task to do and they say, okay, I have to do step 1, 2, 3, 4, 5, 6, and they find out that step 4 is that they could use a certain API, or they need beefier processing that they can rent. They can actually spend that on completing that step of the task. And then you can imagine maybe a couple of years in the future that gets done by accident. Maybe someone says, I need you to do X, these 10 steps, or I want this outcome. And at one point along the way, the AI realizes that money would be useful to it. And so it either asks and says, well, I'd like some money to go buy this, or it could go out and earn it. There's ways that you can. It's open source. You can spin up a wallet. You could post content on Nostr and get tips, and people don't even know you're an AI. I mean, it's kind of far-fetched, but not really. And so, open source money is inherently just more ready to use for various agents that we automate, including automated, funding.
While the big picture for Bitcoin price seems confusing, investors should focus only on the short term and take it one step at a time. At present, the short-term bullish outlook is likely to result in a roughly 12% upside that could potentially reach $30,000 psychological level. After this retest, depending on how Bitcoin holds up, traders should take their next course of action. The critical levels to watch for long-term Bitcoin holders are the $35,260 and $41,273 to the upside. To the downside, key support levels include $25,205, $24,300, and in a dire case, $17,605. That's all about today's analysis. Do you agree with Lyn Alden's perspective about Bitcoin and gold performance as a safe haven assets? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.